Good evening, everybody. I don't know what we're going to watch on TV this week now that they've got the Kavanaugh appointment done. So, anyways, all right. Tonight we're going to kind of decipher what we should be evaluating when we do see signals and at kind of the appropriate places. So, as we're looking at the Dow, look where the evening star signal kind of occurred. There's like a trend channel up here, and you can see the obvious evening star signal. Now, years ago, I would have to fight through my emotions to say, all right, no, we're still in an uptrend. We're still in an uptrend. This can't be. But it's just high probabilities that every time we see a candlestick reversal signal, the reason we're recognizing them in the first place is because the Japanese rice traders showed us that every time we saw one of these signals, the probabilities were that there's been a change of investor sentiment. So when we look at this, at least we know what to expect. So when we saw the evening star signal and the close below the T-line, we had to conclude there was more downside. So being able to visually assess what the investor sentiment is, today we saw them bring it back up after bouncing off the 34. So what do we make as far as our evaluation? Well, the possibility is that this uptrend, it's hit the bottom of the uptrend and is going to bounce back up. But also our stochastics are still heading down. And it came up the 3T line before bouncing down. When you add the evaluation of the NASDAQ, even though it did a doji today, with the prospects that it might have bounced. No, I guess it wasn't from there. Did I hit the wrong spot? No, I guess I thought it had bounced right here. Trend. It was getting close, but it's not quite there yet. So we can visually see that there hasn't been a change of investor sentiment. Even though we did a doji, maybe it's supporting in this area. But stochastic's still heading down. We have to kind of look at that as a little bit more with suspicion or suspecting that this was just kind of a bounce day in the overall market trend. And the S&P 500, the stochastic's still heading down, but try to do some buying there right smack dab at the 50. Again, it might be in the uptrending channel. So what does this tell us? Well, it kind of tells us that when we wake up tomorrow, probably the pre-market futures are going to give us a good indication of whether they're bouncing it or whether they're still taking it down based upon how we anticipate the market opening. So when we're analyzing what sectors to be in or not be in, we've got the benefit of using things that will move a sector, such as, what is the actual name of the T-line? It is the T-line. That's the name of it. The 8 exponential moving average, Christopher. If the crude oil is in an uptrend, maybe that's a sector that you stay with. When we see things like Labu still heading in a downtrend, that gives us a good indication that the biotechs are still heading down. It is just a clean indication of whether gold is moving up or down, or if we even take a look at gold by itself and see that it's not really going anywhere, And we can see that Nugget is kind of illustrating that same trend. That tells us that we don't want to probably be in that area. So essentially we eliminate or decide whether to be long or short a sector based upon other factors that are going to help move the markets or move the stocks in that sector of the market. So some of the biggies, like Apple, right now it's kind of in that same realm that we don't really know which way it's going. Amazon has been weak ever since the selling up here. Also a big long-legged doji. But the suspicion would be that your stochastics are heading down. But you might be kind of heading for this support level. So the reason I draw support levels on things that obviously might be a support level, not so much to dictate where it might go to, but more be cognizant that if they took this down tomorrow and it hit this level and started to bounce, that means that's probably the level that if we saw a buy signal or a reversal signal at that level, that was the level that everybody was starting to buy. And Tesla, as you can see, has not shown any strength, especially when you had your bearish engulfing signal failing here at the moving averages and closing back below the T line. What do we want to do with this? You want to stay short, probably wave 1, wave 2, wave 3 and see a buy signal. We are going to be doing the session on October 20th, where we take the high profit, what I call the top ranked signals and patterns. And the reason we're kind of concentrating on that is the candlestick signals are good indications of a reversal. Candlestick patterns are good indications of a reversal or a potential price trend. But the combination of some signals and patterns not only produce higher probabilities that your uptrend is in progress, but more than likely that you're going to have a very strong uptrend in progress. So, as I wrote in the afternoon newsletter, these are high probability trade setups, kicker signal, telling you want to be to the downside. So what we're going to be concentrating on is when you see a signal, instead of just learning all of them generally, get a few that tell you exactly what should happen. So here we had a kicker signal, an SGH on Friday, which told us if there was more buying, we wanted to be buying because the kicker signal is a very strong reversal signal. But very simple entry strategy procedures allow you to take advantage or keep yourself from getting into a position that's not going to make you any money, or you made money, but it might be 2 weeks before this gets going again. So the fact that they opened SGH lower today and never got back up above the close of Friday pretty much told you, just common sense says the strength isn't there. You want to wait until you see some buying strength. What was the other one? Chef. Kind of the same scenario. A nice kicker signal. Didn't really do too much today. But what is the overall analysis of that kicker signal? In this case, unlike SGH, they weren't selling it off. They were just kind of consolidating. This still makes this a viable trade because what else can we recognize? That kicker signal might be starting wave 3 of a J-hook pattern. So when we know what patterns to look for and what specific signals are telling us, we just improve the probabilities tremendously that we're going to be in a profitable trade. There are other times, too, knowing when to get out of a trade. And that's when you start seeing something like this, and they close below the T line. I always kind of stress when do you get in RP into what? A kicker signal when you see bullish confirmation. If you're referring to Chef, if I saw positive trading tomorrow, especially if they came back up through the high of today, yeah, that tells me the bulls are still there. That's when you can start buying. Oh, I forgot what we were just looking at. Oh, CTL. The visuals of candlesticks, as well as knowing what the signals are telling you, provide a much more clear indication of whether you're in a good trade or it's time to get out of a trade. So the fact that they did an inverted hammer, bullish confirmation, doji, hanging man, shooting star, and then a close below the T line, what would that tell you about this level? They weren't going up, they were going down. You close out the trade and move on to something else. Move on to something where you know the probabilities are in your favor, like a strong morning star, or not morning star, but a best friend type signal. Oh boy, hold on for a second. I goofed up here today. So we've got a few that what's it, NKTR. Here's a case of where you do what I say, not as I do. Today, I thought I was clever and I closed out my short on NKTR because it was trading positives. The stochastics looked like they had bottomed out, coming up. Looks like the market might bounce back up. But the one thing I reiterate to people is let the market tell you what the market is doing. If you're buying or shorting based upon a candlestick daily sell signal, you cover based upon a candlestick daily buy signal. Where would you put your stop on Chef? Well, this is a case of if I was buying on positive trading, where would I not want to see this trade at all? Right back below the low of the doji, which has absolutely nothing to do with the percentage pullback. It has more to do with who's in control at that point. And it still looks like there's not enough bullish strength to be in there. RP, that's all a process of seeing bullish confirmation. Now, obviously, on a kicker signal, just like any other signal, no matter how strong your bullish signal is, if you see the market opening up and heading down, remember our entry strategy quadrants? If the stock that you're looking at is opening stronger, but the market is heading down, there's no rush to jump right in unless you see continued strength going on when the market's going down. Otherwise, if the market's selling off, the initial buying also has people start seeing that the market's going down. You might not have to jump in right away. Now, on the other hand, if we wake up tomorrow and the pre-market futures are showing the market's going to open up 120 points, and this is opening positive, yeah, I'm probably going to get ready to buy this much more quickly. Okay. And so RP, that is the type of thing that we're going to be going through in our October 20th training. Now, we always advertise that it's a 4-hour training. I've added so much more details that I'll figure on 6 to 7 hours. So anyways, there's a couple more here that And so this is why we're going to be going through kind of illustrating the factors of a fry pan bottom or one of the candlestick patterns is that there is more strength or more consistency in a pattern, even though the market might be turning solidly against you, that more than likely the pattern is going to continue to hold up pretty well, even going into the even with the overall market selling off. This gives you a little bit more extra time. So the biggies, obviously, NVIDIA, after the shooting star Harami, and then the hanging man. Told you were in a downtrend. Right now, you've got a doji sitting right on the 50, but your stochastics are still heading down. Doesn't mean that we're not going to go up from here. You just have to be a little bit more cautious that the buyers aren't stepping right in. Did we do Amazon? Yeah, Amazon was heading down. Netflix still heading lower. So when you look at something like this, you can see how they opened it here but closed it up here, but they still didn't have a lot of buying strength. You still have to watch to see if they open this lower tomorrow, they're still taking it down, that the bulls did not take control today. Oh, all right. So not every trade starts off immediately to the right direction. But notice this kicker signal. No strength, no strength. So what's the logic here? If they came back down through the lows here, open lower tomorrow, that tells us our kicker signal is still in progress. Right now we've got the 200, which is the red line, not on this one. The blue line, the 50. The gray line is the 34 EMA. Now, again, you can put whatever moving averages you want to, but the 20 usually is more significant when a trend is in a long, consistent move, and it basically, the 20 will become more pronounced. But we don't get a whole heck of a lot of long, consistent moves. Now, we did a few summers ago where the trend was consistent for months. And so the market never pulled back to the 50. It always kept bouncing up above the, came back down to the 20 when it bounced up off of that. Let's see, I'm going through some of our existing, oh, here's one. We put this out as a recommendation to buy the puts on IPGP on this big gap down. Notice how it failed at the T line. Now, it opened lower, bought some puts, but traded higher on the day. But what did it do telling us about the trend? Didn't change the trend. So the evaluation still is that if this dropped 80 points, traded for 3 months, it may be in its next step down for another 80 points. Maybe not 80 points, but some significant downside. So are there times where things get a little bit dicey? Definitely. But this didn't tell us there was any change of investor sentiment, that the downtrend was still, hadn't shown any reversal. Okay, a few that look good right now. CAG, look at the little wedge. Then what broke out the wedge? Your best friend signal. Where do you think your first likely target's going to be? Right, at least coming up here to fill the gap. Why? Because of that signal right there. And the reason I point out that signal right there, when we go through our quantitative or top-ranked signals and patterns, the best friend signal is what I put as number one. And the reason for that is because of the probabilities of the direction, number one. Number two, the probabilities of the strength of that direction. And then number three, the frequency that we see this is often enough that you're always going to be able to find a best friend signal somewhere to be. So the reason I'm pointing out is a lot of people come back to me and say, man, there's too many signals or patterns to learn. How do I'm not doing well. What's my best, what am I doing wrong? Well, what I've discovered even for myself, that if I just pick 3 or 4 of the trading patterns and just concentrate on those, then I become a, quote, expert, knowing when to get in and when to get out. So knowing when the trade isn't working or how to stay in a trade that is working. Once I kind of master those, now I don't have to be guessing of when to be getting in, when to be getting out. No, I use slow stochastics, 12-3-3 slow stochastics. So I kind of concentrate on trying to find things that are going to produce the highest probability trade setups that I'll be learning. Now, look at the same scenario right here, but on the bearish side. I can pretty much, see there was kind of a little wedge formation right here, and then gap down. Where's my next likely target? Right down in this area. So, just knowing what this little gap down from a shooting star, doji type day tells me is that there's a lot of force going in this direction. So AFMD looked good, but then somebody said it was selling off pretty hard after hours. Yes, it's down to 350. This is why you always wait for confirmation. I get a lot of people ask, well, if we see it setting up, shouldn't we just go ahead and buy? You can, but why? What, I guess the rhetorical answer is, I would rather pay up for it knowing that it's confirming, because I'm not trying to get in as fast as possible for an uptrend. I'd rather wait for the probabilities to tell me the uptrend's in progress. I'd rather figure out how to be in a high probability trade than trying to get in a little bit early thinking I'm going to be in a high probability trade. On CAG, it could be. Yeah, 1.5 maybe. But if you're an option trader, maybe you're buying the 35 and selling the 36.5. That if it got up to that level, your return would be 90%. I'm just picking out numbers. And we don't know whether it's going to stop here. Remember, we're in the oversold area, seeing a buy signal. For all we know, they're ready to bring it back up to this level. So when we see a resistance level, like here or here, what's that tell us? That tells us if it gets to that level, we better be a little bit more diligent to see what's going on at that level. Yes. So right now it's around what, $3.50 on AFMD. So again, that's why people say, well, if you can see it setting up, why aren't you buying? Because I want to see it confirm the signal. ARNC. Recognize the signal here. Anybody? Class? Class? There you go, kicker signal. Kicker signal above the 200. Off the 50. Okay, FMD. Yep. So that's the reward you get when you're trading the biotechs. You can't tell. A lot of people say, well, would you short? I forget which one it was. Let me finish here. This one it's probably going to be on my buy list for tomorrow. Even though there's a trend channel right through here, got a kick signal off the 50 in an uptrend. The Stochastic's coming up. For all we know, this could move back up into these ranges up here. Oh, there might had some talk that might be bought. Okay. A bobble, kind of. Yes, came back up through the 200, but the kicker signal off the 50. I mean, when you add all that together, what would be BP? What would be BP? What? Oh, JB, why are you putting in a symbol well before? Before we get to Jim's double line. The buy point? Oh, I'd be buying this one on Positive Trading tomorrow. Oh, I'm sorry. Kicker? Are we looking at the same chart? Where do you see a kicker on here? Got the best friend. Jake, I don't know. If I am buying a stock where I don't know where my upside potential is, what the heck? How did I screw up the AR? Let's see. I'm buying until I see a sell signal. So if I can't figure out where my upside is, I just stay long until I see the sell signal. We had a nice breakout here. Remember what one of our criteria is for a good, strong reversal? The bigger the signal, the more compelling there's been a change of investor sentiment. You could also see we've got kind of a little scoop pattern. So what would we expect coming off of here, 45 degree? And CZZ, gapped up today. What type of thing do we have going on? Not quite a kicker signal, but the same implication. We can see that came back and consolidated at the 50. So what do we got? It got a J-hook pattern. So where's our next likely target? Somewhere up here at this resistance level. And this is not working. What happened here? Well, this was a fry pan bottom breakout. There's PYX is this. I don't know why it's doing this. Yeah, there's something wrong here. Anyways, this is a fry pan bottom breaking out. There was a lot of trading. I don't know why they missed the. Okay, again, because we can recognize There's strength in the commodity. That gives you more opportunity to check out which stocks are benefiting. Here's Bass. Nice looking bullish chart. And ESV. What do we got? A wave 1, wave 2, bullish golfing going into wave 3. This one will probably be recommended tomorrow and kind of anticipating a lot more upside. Again, most of these are based upon signals or patterns that we recognize. Doji, gap up, best friend, breaking this downward trend channel. Looking for the next wave to the upside. I think, let's see, that was a restaurant. I think it was Bojangles. Another one that's doing, notice the J-hook pattern coming up from this long-legged doji gap up. This was 3-4 points. That could take you up into the $21 range. So because we know what the patterns are going to produce, just allows us to get into situations where the probabilities of things moving higher. A bullish engulfing gap up, open positive above the 50. I would suspect target is here, and if it breaks out from there, still lots of running room. And this is where you observe the obvious. Notice where your best friend signal occurred. Right smack dab off the 50. Where was it time to sell? It's not up here when you saw indecision, when it came back below the T-line. What happened when it got back to the 50? There's your bullish harami, inverted hammer, bullish. What do you think you got going on now? Probably wave 3, which will be the same magnitude as wave 1. And wing. Kind of junky in here, but notice what happened from here. They gapped it up, did a doji, still strength. There's a lot of strength right in here, even though it doesn't look like it. Now we're right at the breakout level. If this breaks out, what do we got going on? There's a left-right combo gap up, wave 1, going into wave 3. So for both the stock trader or the option trader, at least you can recognize where your high probability trade setups. Wing, yeah, kind of a, well, yeah, you wouldn't call it a morning star, but it's got the same characteristics as a morning star, which means the bulls have taken control. PRKT. That wasn't it. PRTK. There's your evening star signal. So this is where you can really see what's happening. Your evening star signal failed right at the 200. This becomes a very viable short. No, you're not trading the 200. Your major concern, since you're probably not going to own this if you're a swing trader any more than 3 to 10 trading days, you're more concerned about the T-line. And you can recognize what's kind of happening here, kind of a little fry pan bottom type setup. The 200 or the 50 have absolutely nothing to do with what's going on the current price trading. On the bearish side, look where they kind of gap this down. Look where you are right now. So what becomes the obvious? If they open this lower, this level, which was the last support level, is not going to be acting as support. You're probably now looking at what would be kind of your next support level, down into this area. Oh, pshaw, get rid of these things. PRTK, the volume is kind of light. Well, for the last 4 days, they've traded, it looks like, well over $1 million, or yeah, $1 million in shares. Now, prior to that, the volume looked relatively light. But right now, it looks like with the volume on PRTK, what happened here? I'm checking over here. Even on the light volume days, it's still trading 200, 250,000. So it's still not a hard one. Light for a short. Now the last few days, today it traded 1.3 million shares. So something's picked up in the activity. Square, this is where you observe the obvious. As soon as you see something close below the T-line, you want to be out of it. If you were long and you held it right here, it had to close open positive trade above the T-line. When it closed back below the T-line, you close it out. Anytime, and again, this is just a probability, observation. So when it closes below the T-line, the probabilities are pretty strong that it's going the opposite direction. So for every time that I have closed out with it going below closing below the T-line, there may be 1 out of 50 times where the next day they gap it up and take it up big. But 49 times, I'm happy that I got out of that trade. So you can see what happened when they broke the resistance level after a bearish engulfing. And then notice what they did at today's, at the 50-day moving average as a support level. There's your bearish doji sandwich. What's that imply? There's still more downside. Maybe down here, fill in the gap. That same thing occurred on Wix. Bearish engulfing signal, closed below the T-line. Broke this uptrend. Then it did a doji here at the 50 and went this way. What did that tell us about the 50? The 50 is not acting as a resistance level. Now we're looking for at least this level and possibly the 200. So knowing what a doji sandwich looks like and what it illustrates, which is there's going to be more downside, you want to go short. What do we got going on here? We've got a bearish trend kicker signal. What's a trend kicker signal imply? There's still a lot of force to the downside. Now, in this case, as I'm looking at this chart, this becomes a relevant factor for something that might look like it's doing kind of a trend, I want to say a wedge type formation. But this tells me there's a lot of force that if it breaches this level, that we're in something different. Let me see what the longer-term chart looks like. And it's not a good-looking chart, but the fact that they pretty much failed right down through here. Let me do another line. I love drawing. Well, sure I am. No, I'm not going to draw it anymore. But because of this trend kicker, we got a lot more information about the strength of the downtrend. If it reaches this level, we probably got more downside. Some of the oils aren't acting well. There's your evening star signal with a hanging man. Close below the T-line. There's a gap right here. Then you've got the 50. So it's probably a good short. STAA. There's your bearish belt hold signal. And once they close below the T-line, you can see they've never been able to close above the T-line. And then where did your bearish doji sandwich occur? So should we be shorting something that's already getting toward the oversold area? Most of the time, not. But if we got a bearish doji sandwich, it implies there's more downside, and we're getting into the oversold area. We should kind of now look, where's our next target? There's a gap down here. That may be where your next target's going to be. You're still trading the signal. Remember, the T-line is just a confirming indicator. Yeah, it might tell me. But remember, tomorrow the T-line will probably be down in this area. So if this still trades lower, I'm trading the signal. Team, I wouldn't be doing anything. Well, maybe I would. But it was more to illustrate the fact that you had a doji right here on the 50. That's when you should watch to see what happens at that level. Kind of the same thing. Well, no, not so much on this one. IOVA, a failure right here. If it breaks this level, what do we got going on? A bearish J-hook pattern or downside. OKTA, bearish doji sandwich that told us we weren't supporting here. Remember, when they start crunching these, the T-line is going to take a little time to catch up. So when you start getting too far away from the T-line, what do you start doing? You start watching your 10-minute chart and seeing if a new signal is setting up. Alarm. Broke this resistance level with a gap down. Where are our targets? Filling the gap and the 200-day moving average. So what we're really looking for is things that are showing excessive selling strength. There's another bearish doji sandwich. Look at the strength of your evening star signal. Notice what happened when it hit the 50. I mean, this is just kind of observing what happens in human nature. They bounced it back up to where? The T-line. What happened at the T-line? They failed. Where are they now? Right back here. So if they open this lower tomorrow, what pattern is setting up? Your bearish J-hook pattern, bringing you down into this area someplace. What did we just do? CDXS. And NTNX. What do we got going on here? Your next pattern to the downside. Wave 1, wave 2, looking at wave 3. NVCR. So let's get rid of this. Where are your targets? Well, obviously there's your first target. There's another target. Any other targets? This is where you want to see what everybody else is watching. So if you threw your Fibonacci retracement numbers on here, there's your 38% retracement. There's your 50% retracement, right around the 50, and there's your 62. So Are they going to go, which level are they going to go to? Have no idea. If I pull back and I see a buy signal right off of this one, that tells me they're buying at the 50% retracement. I'm not trying to calculate where it's going to. I'm watching where it is going to go to before the buying starts. Oops, I just did that one. Sale, once again, a doji sandwich that failed at the 50. There's a gap to fill right here for the 200-day moving average. So when you look at something like Hubs, there was a doji sandwich that went through the 50. I'm telling you, there's more downside. So the reason we want to know what the patterns look like the bearish J-hook, or the bullish J-hook, or the fry pan bottom, or the dumpling top, or what a doji sandwich, when you add that all together, you're dramatically improving your probabilities of being in the right place at the right time. So what we're doing in this next training session is not only identifying the high probability patterns, but we're going to kind of package them to say, all right, let's say you want to buy the breakouts. Well, you might want to take a look at your best friend, your left-right combo, and your kicker signal, and your, I don't know, your breakouts. What was before Hubs? Wooden spokes? Man, what a funny guy. Sale. I was just using it as an example. So, more of an example there, if you see that doji sitting right on the 50, you want to see what it does the next day. On a doji sandwich, what is the typical entry and exit points? Some of the candles after a doji are very large, which means a large trade risk. I'm sorry if I'm fairly new. Well, no, the other side of that question, or that trade, Jake, is if you see this big candle and you see that doji, what do we know as far as the doji rule? The price is going to move in the direction of how they open after a doji. So if it opens lower, you can start shorting immediately because you know what the magnitude of this candle is going to be. Probably the same magnitude as this candle up here. So that becomes your entry. Now, if you're in this, you know that you probably want to stay in it, that you've got more downside. I'm sorry, I'm fairly new at this, trying to keep risk to 1 to 3%. Jake, the reason you're trying to keep risk at 1 to 3% is because that is something you have established. It has nothing to do with what the price move of a stock is going to do. I often hear all these money managers say, if you get into a position, you want to get out with a 3%, at a 3% loss, a 5%, 6%, 8%. The answer to that is the market doesn't give a hoot where you got in. The answer is if you're getting into a bullish candlestick signal confirmation, where is the level that tells you should be back out? And in this case, if you shorted right here, shorted right here, where's your logical stop? You don't want to see it come back up above this level. Now, is that bigger than your 1 to 3%? Probably. But what are your probabilities? Your probabilities are that things are moving in this direction. Okay. Are there any other, let's see, here's the link for members. Oh, I think tonight's the last night you can sign up to for the October weekend as a member for the 50% discount. After the night, it goes back to the full price. So with that, is there any general questions on candlesticks? It doesn't matter. If you put your Fibonacci numbers on here, it's right at the 50%. That makes you a little bit more attentive as to whether they start buying from here. But as of right now, there's no buy signal. So, yeah, Jake, so that should be your calculation is, what are my probabilities based upon a candlestick signal of which way it's going? Now, every time I see it, the probabilities, I know that it's going to should be going in the direction of the, well, let me give you an example. I bought puts today on IPGP when it opened lower, knowing where where the bulls would be too much in control, which would be if they came back up above the open of yesterday, that was telling me there's a lot of bullish strength there. I want to be back out of that trade. Now on an option trade, that might be a 50 or 60% loss. But my probabilities, based upon not seeing the strength in here, is that it's still probably going to continue lower. On the scoop, is there a rule on the length of handle in relation to the curve? No, not really. Sometimes the handle's very short, and I'm trying to think of which one it was. One. That right there is kind of a short handle, but you can see how it's kind of a handle and a scoop pattern. Sometimes, if you're in an uptrend, this might only be 3-4 days and then a scoop pattern, giving you more of a J-hook type pattern. But what you're really looking at is investor sentiment. Boring, boring, boring. They get out, and all of a sudden they start coming back in with much more fervor. What are your stop loss? What would be the indication that the bulls were definitely back in control on this one? If they could trade it back up above the open of the big gap down. As long as it stays below that, I know that I'm still in a downtrend. Okay, I guess, Jim, go ahead and do the double line. Jim? All right. And then in 3.8 seconds, do another double line. I'll be right back. Oh, sorry about that. I had to wet my whistle on my monster drink. Okay. Okay. Back up here. All right, Apple, we did. Apple didn't show anything. Again, it closed higher than where it opened, but didn't change the direction. So I wouldn't think there's going to be a whole lot of strength just yet on this one. And checkpoint, kind of a doji sandwich, even though it did almost a hammer type signal in the oversold area, you still watch to see if I was short this one, I wouldn't want to see it come back up above today's up. SIG, nothing here. Your left-right combo. Your berry signals up here, close below the T-line. All you can do is stay short. You're getting toward the oversold area, so my safety stop would be just above today's high. Intelsat. You stay long until you see a sell signal and a close below the T-line. Obviously, it used the T-line one more time as support. Tesla, you just stay short. Nothing there to show you any bullish strength. GTX, for some reason, RG just did not come up over here. I don't know why. Netflix, again, you stay short until you see a confirmed buy signal. VRS, this one's getting a little bit soggy, which means it has to open positive and trend positive tomorrow to stay in it. If it opens lower, what's happened? If it trades below the T-line, it's also lost its trajectory. And Squirm, stay short on this one if you're short. Look at your EV star signal, bearish J-hook pattern. Microsoft, another one, you just stay short until you see a confirmed buy signal. This one's a toughie to trade. It just doesn't move around as much for a trader. Honeywell, another one where if you're short, you stay short, but you use the T-line. You don't want to see this one close above the T-line, which makes this one easier to kind of control because you're right there at the T-line. AMD, you stay short until you see a buy signal. And where do you think your logical where do you think your logical target is? Let's see what it does right here at the 50. Starbucks, not a very big percentage mover, but it is doing a little J-hook pattern. You can get ready to buy this one because it looks like the uptrend is remaining in progress. Schlumberger, having a hard time getting up through the 50. However, if it does come up through the 50, then your bobble breakout is in effect. That's when you buyer or a strong buyer. MCS, stay long. Nice uptrend. CNAT, if you're short, stay short. VCell, stay short. VRR, stay short. You can probably even short this one on weakness tomorrow. Salesforce, stay short. Very doji sandwich, and they couldn't hold the 50. You stay short until you see a buy signal. Bye. So this is where you observe the obvious. They closed right there at the 50 and did a bullish Harami today. The Stochastic's starting to bottom out. If you're short on this one, you definitely don't want to see it open positive. If it opens positive, more than likely it's coming back up to test the T-line. Then you can see whether it goes through to be a buyer, or if it fails, you can re-short it at that point. And PayPal, another one where you just stay short. Again, here would have been a point to see, all right, they hit the 200. Are they bouncing up? No, they opened lower and took it down. You stay short until you do see a buy signal. The CBOE. There was your left-right combo. There was your confirmation. So you can be a buyer of this one. Where's your next likely target? They could be bringing it back up to test this level. Zynga, nothing. Would not be in this one at all. AXTA, a morning star signal. If you had been short, where was your logical stop? Right here. It came up through there. Where were they heading to? Back up to test the T-line. CGC, that's a toughie. Would have been out of it and not necessarily in it just yet because you don't really have any buy signals. So pretty much you just have a sideways moving chart. Not anything to really go after right now. And XLU, you can stay long on this one. EBR, there's lots of charts looking like this for some reason. The big breakout moves. I think mostly coming from the Brazilian area. If I buy above today's high, can I use a few cents below today's open as my stop? I guess the question would be, what is there that's indicating you want to be buying at this level? Stock's already moved up almost 50%. Here's the area you should have been buying. This is the area where you start watching this. You want to start taking profits. So if you've missed this, you don't want to be chasing after it. If you are, yes. If you're buying on positive trading, don't let it close back below this level or even let trading back below this level. That would tell you the profit taking is started. But when you see a chart like this, instead of thinking, oh, I should be buying, you should be looking at what was the buy place. There was a fry pan bottom breakout with a kicker signal. That's the area I should have been buying. And Boeing, you can stay long as they don't close this below the T-line. Were they exactly the same? Now it really goofed things up. Let's see. Yesterday's low was 1985. Today's low was 1986. Yeah, it came out of tweezer bottom, 1 penny difference. Looks like it's trading to get out of a lot of winners in the past few weeks. What does that tell us? Panic selling or a bad market is coming? No, we don't know if it's a bad market. All we know is we've seen up, pullback, up, pullback, up, pullback, up, pullback. So there's nothing that's on us. There's any great reversal yet. I mean, it could be. But right now there isn't that panic selling. Uh-oh. That's not good. Hold on for a second. Let me see. Oops. Try this one. See if that link works. Oops. INSY, when it closed below the T-line on Friday, you should be out of it. Again, your trajectory is gone, and now your prospects for it heading lower was that much greater. Yeah, you should have gotten a link in the emails also. I hope. Dollar Tree. That one, if you were short, this is where you kind of visually add everything up. You're in the oversold area and you're seeing lots of dojis, telling you there's not a lot of force to the downside. Today, I would have probably closed out any short position. I wouldn't be ready to go long until you see more confirmation. Adobe, you just stay short. You see a buy signal. Okay. So the money right now is being made on the short side. There's a lot of good. That's not one. What was the other one? Got 3 or 4 good ones on the short side. KTR, EDU, and then the biggies are all kind of selling off. Amazon. Okay, everybody. Everybody have a good evening. We will see you bright and early in the chat rooms. We'll see you then.